Hey everyone, welcome to this week's episode of Market Watch. I'm Jason Zwolak of the Zwolak Group with First Team and Christie's International Real Estate. I hope you all had a great week. For those of you tuning in for the first time, each week I tackle different real estate topics, including local market updates, all in the hopes of helping you navigate the world of home buying, selling, and investing. If you like this video, make sure you hit that thumbs up button and don't forget to subscribe so you're notified every time I post. I post new videos every week. The telltale signs that the market has changed are all here. Homes are not selling as quickly, and it is common to see open houses for multiple weekends in a row. The number of price reductions is increasing, showing us buyers are sensitive to pricing. Sales prices are no longer stretching thousands of dollars over asking. The heydays of the past 2 years are gone. The rapidly appreciating, insanely hot housing market has turned into a completely different, much slower, slight seller's market that requires a much different strategy and approach to find success. Orange County's expected market time has increased from 19 days in March to 72 days today. Anything below 60 is considered a hot seller's market. Below 40 days is insane, and at 19 days, it is nothing short of instantaneous. That is where buyers trip over each other to see every home that hits the market. Sellers call all the shots, multiple offers and bidding wars are the norm, and home values skyrocket. Yet at 72 days in today's market, sellers still get to call more of the shots, but there are fewer multiple offers, home values are not appreciating that fast, the market is no longer instant, and properly pricing is absolutely crucial to find success. The question is, what happened in just a few months? When mortgage rates climbed from 3.25% at the start of the year to over 6% in June, home affordability took a massive hit. Buyers backed off and demand dropped. Year over year, demand is down 40%. In fact, Orange County demand is at its lowest level since tracking began in 2004, slightly lower than the start of the housing meltdown in 2007. It is down in every price range, including luxury, due to the Wall Street volatility. It took a while this year to feel the increase in the inventory due to starting 2022 with a record low 954 homes on the market. The 3-year average prior to COVID was 4,665 homes. As rates continued to rise, demand diminished and the active inventory started to increase. In mid-May, there were more homes on the market compared to the prior year for the first time since August of 2019. The unrelenting rise in rates slowed demand further, and the inventory has climbed significantly since May. Inventory is now up 59% compared to last year, and every price range has a lot more homes available to purchase, other than the homes priced below $500,000. Due to values rising substantially over the past year, there are fewer homes worth less than $500,000, thus the drop of 24%. There are 79% more homes available between $750,000 and $1 million. Between 1 and 2 million, there are more than double the number of homes that were on the market at the end of July 2021. Many sellers are approaching housing as if nothing has changed. They are stretching the asking price and testing the market as if appreciation is continuing to skyrocket. Unfortunately, overpriced homes are now quite common. 35% of all homes on the market have reduced their asking price at least once. It was 19% in May. However, these price reductions are not indicative of a drop in home values. Instead, it shows us that a bunch of sellers initially priced their homes too high. The result, these overpriced sellers lose out on the most valuable marketing period the first couple of weeks after placing their home on the market. Orange County's inventory was up 6% the past 2 weeks and now sits at just over 4,000 homes for the first time since October 2020. Inventory growth has slowed as demand has finally stabilized. This was the smallest 2-week rise in inventory since April. With the rise in inventory slowing, housing may peak in August. If that occurs, the overall speed of the market will remain nearly the same for the rest of the year. Last year, the inventory was 37% lower than today. Demand dropped another 8% the past couple of weeks and now sits at its lowest level since May of 2020. After mortgage rates peaked in mid-June, they have been dropping since. This has increased home affordability and demand has stabilized. It is still low compared to prior years due in large to higher interest rates. Last year, demand was 66% higher than today, and the 3-year average prior to COVID was 52% higher. With inventory continuing to rise and demand falling slightly, the expected market time increased from 67 to 72 days, a slight seller's market. This is much higher than the last year when the expected market time was 27 days, but is lower than the 3-year average prior to COVID, which was 80 days. The luxury inventory of homes priced above $2 million remained unchanged over the past 2 weeks. At the same time, luxury demand decreased by 6%. Expected market time for luxury homes increased again and is now sitting at 133 days, up from 126. It takes nearly 3 times longer to sell a luxury home today compared to February. The volatility of Wall Street has significantly impacted the luxury housing market. Year over year, luxury demand is down 24% and active luxury inventory is up 35%. Expected market time last year was 75 days, much stronger than today. For homes priced between $2 and $4 million, the expected market time in the past 2 weeks rose from 98 to 107 days. For homes priced between $4 and $8 million, the expected market time increased slightly from 159 to 173 days. And for homes priced above $8 million, the expected market time decreased from 625 to 372 days. The bottom line is that sellers must carefully price their home at the fair market value by looking at recent comps and pending sales while taking into consideration the condition, location, and amenities. Overzealous sellers who require future price reductions will get fewer interested buyers, fewer offers, and ultimately will net less money. For buyers, while the market is slower than the start of the year, it is not a buyer's market where values are going down. Homes that are upgraded, in great condition, and priced well will still sell fast. The longer a home has been on the market, the more willing a seller is to negotiate, so you might find a deal or two out there. If you like this video, make sure you get that thumbs up button, and don't forget to subscribe so you're notified every time I post. If you have any questions, send them to me directly or write them down in the comments below. I'll make sure to answer them as I'm here to help in any way that I can. I hope you all have a great weekend, and until next time, take care everybody.